Alright, good morning, guys. On top of everything else that I am doing lately, I will be doing a small series on business tax deductions and kind of things to look out for and some stuff that you can do. Um, there's three basic types of write-offs that you can do. It's personal expenses, uh, that has a whole different set of rules from investment expenses, investment taxes, which include things like charitable donations, uh, goodwill, other charities, those kind of deductions, and then business deductions. I am going to stick with the business deductions because that's what I know the best, and I'm most familiar with those rules in my area in Michigan. You definitely want to check on your rules in your state because it does change kind of per area, and a lot of times it will change every year too. They'll change things. So a couple things to look out for is the government will decide after a couple of years if you have a hobby or a business, whether or not you consider it a hobby or a business. If you show losses more than a few years in a row, the government will say, hey, you're not making any money. We think this is a hobby, and you're just trying to play the system. So that's one thing that you have to be careful of. And kind of along with that is the advice that some people will say, and a lot of people will hear, is in order to get a really good tax write-off, just claim a loss every year. Don't do that, especially if it's not true. If you're trying to wiggle your numbers a little bit, be careful. The deductions that you can qualify for, and what deductions really are, or write-offs, is the money that you are entitled to subtract from your gross income and your profits and everything. The only things that you have to pay taxes on is not your gross income, it's your net income. So after all of your expenses and charitable donations and all that stuff, medical expenses and everything have been taken out. So you're not paying taxes on everything you make. You only pay taxes on your net income. A few ways to start getting into business to where you can qualify for these deductions is the way I did it was I started as a DBA, which is a local kind of certificate of business. It's not completely necessary, but for me, one of the reasons why I got it and why I recommend people getting it is because it solidifies your name in the state records. So if somebody else comes up with another business and calls it whatever your business name is, if they claim it first, if they file with the state, then they can have rights over it, over you. So that's one reason why I like to do it, especially if you're just starting and you don't have all your paperwork together yet. The four big types of filing for businesses that most people do, especially once they get past the DBA and the startup stage, is you can file as an LLC, which is a limited liability company, a sole proprietorship, which is what most of what I do is, a partnership with 2 or more people, a group of people running the business that get to make decisions, and then a corporation. And each one of those has slightly different details in the rules for what you can and can't qualify for. With the business taxes, not the personal or investment, but just with the business side of things, a lot of the big tax deductions that you'll qualify for will fall into, there's about 12 or 14 basic categories, and I had to write them down because there's a few. They are startup expenses, operating expenses, office expenses, business or travel, workers and hiring, onboarding processes, medical expenses, record keeping, um, long-term assets, inventory, car and travel expenses, which includes vehicle maintenance on fleets of vehicles if that's part of your business, meal and entertainment. That's one that you have to be careful with because you can't overdo it. um, we'll say as a hypothetical, I mean, you can't really take, you can, but you're gonna have a hard time explaining it. Taking your clients to like a big party or whatnot. You really have to prove that you were networking and it was for business and that kind of thing. If the government deems it too extravagant or whatnot, they may not give you credit for that. So be careful. Regular business dinners and things, most of the time, they don't have a problem with it. Retirement deductions, and there's a few other miscellaneous random things in there. You definitely want to save your receipt, or if you don't save your receipts, at least have some kind of documentation for your purchases that you make, any sales and business deals and that kind of thing. Always have records, a paper trail somewhere. That way, if you do get audited, especially if you're a new company, if you do eventually get audited, you can just hand all that stuff to the IRS guy, the tax guy, and say, here you go. And it's their responsibility to sort through it and figure everything out. So as long as you have the records, you're fine. Let's see. And in this series, I'm not specifically going to talk about tax returns because that's a whole other lengthy ballgame. I'm just going to focus on the deductions and things for this series. And the crap advice that I mentioned earlier about somebody might say, hey, just report a loss the first couple of years, then you don't have to pay taxes on whatever it is that you're doing. Be careful with that because it's the way that the government can step in and say, hey, we don't think you're running a real business, is they have a provision called the hobby loss rule, which is if you show a loss more than a few years consecutively in a row, they can step in and say, hey, we don't think you're running a real business, you're not showing a profit, you're not following what we want you to do, so they can do that. And like I said, each one of the 4 types of businesses, the LLC, the sole proprietorship, the partnership, and the corporation, each one of those has different details in its tax rules and regulations. So that'll affect how you set it up. I mostly do sole proprietorship, so I will speak more heavily on that throughout the series. But I would definitely mention the other 3 for sure. I have worked in a few different LLC situations, and so I'm pretty confident and well-spoken in that area as well. The other 2 I haven't quite gotten a whole lot of experience in yet, but I do understand how it works. So we're going to start with that, and then get into the differences between the types of businesses, and a little bit on how that's going to affect the wording, and then a few of the legal issues, and then I will start getting into each one of the different expenses that you can deduct, why, the percentages. There's some that you can deduct per percent, and there's some that you can deduct per what the government says it should be, and that depends on which one's more, and so there's different ways that you can get around it. But each one of the office expenses includes computers, different systems, wording for safety, things in the office, retirement deductions, I'll get into that, inventory, long-term assets, all that good stuff. So we'll get into it, and hopefully by the end you guys will have a little bit of a better understanding, and I can show you guys that I do know a little bit of what I'm talking about. So